Most people say you can't time the market. I say you have to. I'm Scott Redler, Chief Strategic Officer for T3 Live. I would like to invite you to an exclusive swing trading event in Newport Beach, California on Saturday, February 23rd. Students will learn the 5 keys to becoming a successful swing trader and how to navigate the market using what I call a portfolio approach when it's conducive in the market. Reserve your seat at t3live.com or call our toll-free number 1-888-99-T3-LIVE. Good morning. My name is Scott Redler, Chief Strategic Officer of T3Live.com.
And I'm Brittany Umar, and together we bring you Morning Call. So futures are looking positive this morning, as seems to be the trend for 2013 so far. But this is a shortened holiday week, so what should traders be looking at?
I think first thing they were looking at was to see if they would get any big headlines out of the G20. You know, lately currencies has been on everyone's headline or on everyone's plate, so to speak, because of the action that we've seen with the devaluation of the yen, or even the strength in the euro. So we were coming in to see would there be any volatility from the G20, and it seems though that they're all behind that this easing theme, which is keeping equity markets pretty propped up with low volatility.
Now, what if we took a closer look at the yen? What could that tell us?
Well, the trend to the downside has been strong. And I think every day I get an email from someone saying, you know what, I'm playing a cute counter trend trade in the FXY or the YCS. And if you look here at the FXY, it really hasn't had a sustainable bounce. Obviously, it's been a huge move to the downside. So if you are short, sometimes it's prudent to cover near the bottom, because even though we can continue, why not take the trade? So at this point, you look here, it's trying to put in a floor, but it's really not bouncing hard off that floor. So I would think if anyone's trying to play a counter trend move, it's going to have to get above 105.78, but if not, and it breaks this lower area, you're going to see more downside action. And then on the flip side, you take a look at the YCS, look at the size of this move to the upside. Okay, and at this point, it's going a bit sideways, but sometimes sideways is consolidation or digestion. So at this point, here's your upper range, and if this starts to break above this 59.17, you're going to see shorts get squeezed again. But also, again, the move has been so big that you don't want to be in too much over here, but the trend still is up, but the 8-day is starting to roll over a bit.
Well, also on the calendar this week, we have the Fed minutes on Wednesday. We'll potentially see what the pace of purchase might be for 2013. What effect could that have on the market?
I think we're looking just for any type of clues, for any type of composure change, and the Fed minutes will have some clues on what their pace of purchase could be. And they've been committed to about $80 billion, and some people think they might slow that down, and if that was the case, maybe that would cause some volatility. But at this particular point, the trend in the S&P and the trend in a lot of the leading sectors have been strong, and we've been following that 8 and 21-day moving average, so we'll just see how it dances around them come Wednesday.
And also, earnings season is winding down. We have Hewlett-Packard and Dell both out this week. Any chance that we could see those earnings create some volatility in the market?
You know what, a few years ago, maybe, or if it was the 90s, maybe, but at this point, it feels like Dell is just going to be trapped based on them going private. The big question with Dell is, will it be $15 or will it be $13.65? You take a quick look at Dell, you'll see that it's stuck here right around $13.81. So some think it might come in a little bit higher, which I actually think it could come in a little bit higher. But as far as the earnings, probably not going to matter that much. Hewlett-Packard, different story. It had a nice move, a nice treasures for trash trade from 12 all the way up to where it's been consolidating. So it'll be interesting to see if that earnings report has enough in it for it to clear this 1722 to keep it rallying, because some of these mega cap names have been fun to trade off the lows, and it'll be good to have them continued in the game.
Well, before we jump in and check the temperature across sectors, remind us what are the key levels you're watching in the S&P?
It's truly the 8-day and the 21-day. We haven't touched the 21-day once in 2013, and we've only danced around it a few times, as far as the 8-day. So if you look here at the spiders, look at this strong trend that everyone just wants to fight. This was the gap up to start the year, sideways digestion, keeping this gap intact, showing power, showing professionals supporting it, and then the 8-day caught up, and then here was your stair step higher. This was your 1474. That was the prior high. This was that breakout. This was probably your spot to be, max positions, which I think I had 13 to 15 longs right around this day, and then you had a nice move up to 1500. Good spot to trim, and then from here it's been a little choppier, but we're still up in there and we're still trending higher. You saw what happened on Friday. The whole Walmart Walmart news, it tried to come in and then stayed strong. So right now, if you're trading a level versus a level, 150, 155 is your new support area to trade against, and pivot resistance that if we start to clear, which comes in around 152.60, could lead to a move to about 153, 153.5. So right now, this trend line is intact, and you stay with it until it changes. If we close below it, then maybe we get our first test of the 21-day, and you actually catch a little bit of a cute short. But at this point, I wouldn't be doing too many different things.
All right, well, as I said, let's jump in and check the temperature across sectors, starting with industrials, which keeps leading the market higher. The XLI continues to grind higher above its 8-day moving average. Is more upside in store?
I think it's been status quo. It takes a rest, it goes, it's been leading, it hasn't showed us anything different. You look at the XLI right here, the industrials, it started the year, it gapped up well above the September high, showing leadership, waited for the 8-day to catch up. You had a clean breakout, extended, another consolidation period, and it went again. So at this point, the industrials are still providing leadership, and I don't see any faulty action yet.
And financials still acting well for some time now. The XLF still looking strong as well.
Yep, and they've been giving us some add-on trades, some spots for cash flow, spots to stay with swing trades. And I think this is a group that traders are comfortable with to actually see if we get some type of retracement. And if you look at the ascending channel in the XLF, it's pretty apparent. So if you draw your line here and you draw the 8-day moving average, if we were to close below the 8-day and below this trend line for the first time, perhaps we get a small correction to the 21-day. And I don't think it's going to be much bigger than that, and it hasn't happened yet. But if it does, traders will be watching, and then that'll be a sign to maybe lean a little bit net short. If you want to use Goldman, which has been a really nice key indicator, this was your core long around 121. If you missed that, you could have accumulated on this gap up. And look at this ascending channel that you could ride, and also hasn't been at the 8-day or closing below. So if you were to see Goldman Sachs close below just say 153 for the first time below the 8-day, perhaps that would signal a bit of a rest. But until you see either of those signals, just stick with the trend and just maybe have a little less size and a bit fewer positions if you want to be more tactical, because that's been decent to go by also.
All right, and as for the home builders, the XHB saw a nice breakout on Tuesday and is flagging nicely at highs. So where is next resistance?
It's as I look at all these ETFs, it's like the same trend. And so with this one, this has been strong for over 2 years. 2 years ago, talked about it with Kramer about the housing recovery, how it could lead to a huge equity increase, which is the reason why we started the road to 1700 way back when. And if you look here now, lots of different patterns here. But ultimately, this was to start the year. This was your gap up. If you look here, this also gapped above the September high, showing you strength. Then it hasn't had much excitement. It's been just moving to the upside, and then finally you had, look at this, the first group to come and test a 21-day moving average. So it combined, both moving average touched, and then boom, breakout above this descending channel, and now it's kind of hovering again. So it'll be interesting to see, if it holds the top half of this scenario here, you're going to probably see some continuation. So at this point, lots of nice methodical trades in here. I know Sperling jumped on this XHB, with some of the names right on that pullback. And again, the trends are strong, and it's much, or I would say it's not say easier, but it's been paying off more to ride it versus looking for cute trades to the short side in the middle of it.
Now, what about the XLE, which did have a sell-off on Friday? Would you say that was a controlled pullback, or is more downside in store?
This was definitely tricky, and this is why I tend not to be in the oil names as in depth. I use them for cash flow, because last week we saw Thursday, nice breakout in Schlumberger, in XOM, in the OAHs, the XLE, and then on Friday, look what happened. And this is hard to deal with sometimes as a trader, where you have a clean breakout that looked like it should get continuation, and then the next day, pow. That right there, is hard to deal with as a trader. But again, if you took this home long, you did the right trade. So now I would say, see if it leads to some faulty action. So for the XLE, I would write down 7803. But you look at some of those names, like look at EOG, for instance. This one actually gave you a little sign because it opened up and couldn't hold it, and then had to follow through to the downside Friday. So right there, that's choppiness, and that's something that's saying, be aware. Schlumberger, a little bit different real quick. I know I played that on Thursday, and it was I actually didn't take it home long, which was nice because I didn't have to deal with this little bear surprise where it opened lower and didn't really give your way out. It didn't engulf the whole day, but something like this after a nice breakout day, it's not the end of the world signaling, but it's something that says, okay, it's time to pull back just a little bit.
And then consumer staples have been one of the top performing sectors for the past 2 months. What would you say are the key levels to watch in the XLP?
Let's take a look, because that's a group that I haven't been trading that often, and we can't be everywhere, but this too has had a heck of a run. This went above resistance here, tracking the 8-day, closed on it once, let it catch up here, and just again, you pick your pleasure here. You don't have to be in too many things. I think the key here, Brittany, is picking 1 or 2 sectors that you really like. Watch the trend, follow the trend, and when it changes, you change. And right now, you don't need to be everywhere. You don't need to have 50 positions, 30 positions, 20 positions. Have 4 to 6 and ride the trend. Add some cash flow tiers around it based on the patterns, and then when the trend changes in a blaring fashion, not just a maybe, then perhaps you take some risk off and you figure out if you could maneuver it in a cute fashion. But until then, keep going with it. And we talked about market volatility before. The VIX settled in the red last week and looks like it's getting pressured from its key moving averages. So where do you see it going from here? A lot of people actually at the trade show are saying, what should we do with the VIX? What do you make of the low volatility? And typically when you have a really low VIX, that really means equities are going higher. Everyone wants to try and say, oh, why? Everyone's too complacent. But sometimes, don't read too far into it. Listen, if you have a big portfolio and you want to insure it, buy some VIX calls. Why not? Don't buy too many of them. And obviously insurance costs you money until you need it. But if you want to feel comfortable and sleep at night and you want to buy the VIX or put on a hedge, so be it, especially up here when we're close to 1520 in the SPX. All right, well, coming up, we're going to go in the trenches with high beta tech. But first, a quick commercial break. We'll be right back.
I'm Mark Sperling, Director of Trading with T3 Trading Group and contributor to T3 Live. Do you trade on your own, but you wish you enjoyed the benefits of a large trading floor? With the T3 Live virtual trading floor, we deliver that experience to you on your computer. On the VTF, you can follow the long and short positions of experienced professional traders like myself, Scott Redler, and others, and listen to our live radio stations as we navigate the markets. In addition, you get the added value of a large community of sophisticated and like-minded traders. Your membership to the virtual trading floor also includes access to our 2 very popular newsletter products, Off the Charts and the Price Point Sheet at no additional cost. In my opinion, joining the room will be the best trading decision you will ever make. I would like to invite you to begin your membership with a 7-day free trial. To get started, visit t3live.com and click on the Virtual Trading Floor tab. Have a great day, and I look forward to seeing you in the VTF.
Good afternoon. Welcome back to the morning call. We're going to go into the trenches with what sector, Brittany? High beta tech is on the calendar for in the trenches. Let's start with Google, which has been best in breed. It made an all-time high of 793. Would you say this should be a new point of reference? Yes, I would say that's your trading pivot. Whenever you get into a situation that starts to get very overbought and at historic highs, you either hold it as a macro investor or you trade it based on the pivots, but you use a level versus a level. And as far as high beta tech, this has been best in breed. Okay, last year was my high beta tech stock of the year. It did make historic highs last year, then it pulled in. And this year, since earnings, it's been the stock to go to as far as, buying the dip and whatnot. And if you look at the chart here of Google, you will see that, this was last year's historic high. Okay, then you had a pullback. Remember those faulty earnings or the earnings that was released midday? Okay, here's your little red dog reversal right there. And really, the stock was reborn after earnings. You had a gap up, and we talk about if gaps don't get filled, you stay with them and you ride them. And then it created a pivot coming into the 760, then gave you a nice little breakout trade. And then I do remember, I think it got downgraded 4 times, into this support that held. And then I do even think that on this day when it looked really good, that's when the news came out that Eric Schmidt was going to be a seller of it and didn't stop the stock there. And, then you had another trade. I think some people bought it on Thursday. You had a breakout Friday. It's opening up. So at this particular point, if you want to trim and trail, be my guest. It's been best in breed. If you want to try and trade versus a pivot, this was, like you said, Brittany, what was it, 793.26, which is Friday's high. So if it breaks through, touches 800 or so, and comes back and creates a tail, maybe it'll have some weakness. But overall, it's been riding this 8-day moving average, which I feel like I should put 8-day on my driver's license or on my license plate, because it's been something that could, put some gas in your tank, even though it's very expensive, because that's been the way to go. Well, we have seen more weakness out of Apple last week. What's the next key level of support? Well, last week we were talking about perhaps 463 to 465 holding. About 2 weeks ago, we finally saw a nice bounce. We saw a tradable bounce, a bounce that you were actually able to hold Apple for more than just a day. And I think we pretty much did a nice job holding it for 3 or 4 days. But again, the descending trend in Apple is intact and is very strong. If you look at the chart here of Apple, you will see ever since I put the top in at 700 back last September, so if you go to the chart, we could show you the trend line to the downside. And it's been pretty fierce. And here it is, 700. This is when I said if we break the 21-day, we could probably see a move to the 50-day. Went to the 50-day. It was a 3-day little bounce. And then, we just went lower this entire time till finally, this was your first tradable bounce. And this is when the market had its reversal November 16th. You were able to buy this red dog reversal, get some follow through, saw some commitment. But then what happened? This descending trend line negated it or just posed too much resistance, and he came in again. Here was to start the year. Nice little trade through this. The reason why we love descending trend lines, because when you break through them, you get some power. And remember, this trade was a nice one. And then we talked about, in order to see some commitment, we'd have to see this hold, and it didn't. And then here's where we are now at the bottom of this area. This was when it woke up. You had a quick move to fill the gap up to 485. We've been coming in a little bit. Apple's up a few dollars pre-market, so I would say this. If it could get back above this, 470-ish, 473, maybe start cheating long again. Because then at some point, as we get closer to the shareholder meeting on February 27th, there is a chance with heavy volume, if we take this out, we could see more of a sustained move up to about 550. But for right now, I'm still going day by day, and I'm hoping that I could get involved for more of a sustained move, because life's much better for me, when Apple goes higher. Maybe I should learn how to short it more.
Well, then you take a stock like Amazon, which looks like it's trying to hold its 8 and 21 day. What levels are you watching here?
Amazon woke up last week. It was one of the stocks that after earnings became weaker. It was rejected at its historic highs. And if you go to the chart here, you'll see on Amazon that here is at 284, which rejected it after earnings, and it slowly came in. I was actually trying to short it around here, thinking it would break down. Lost some money trying, but didn't get stubborn. And then you had this nice breakout through this, well, oh my goodness, a descending trend line. That's why we like it. And then on Friday, it was a little weaker. Maybe it was due to option expiration, who knows. But in order for this thing to stay in the game, for traders like me to think about staying with it for momentum, I would say this 263 has to hold. And then if it could start taking out 270.65, I think we get an additional move, and that's where traders will probably be jumping on it.
Well, Netflix is on traders' radars after its big momentum moves since earnings. Now, it's holding tight at highs here. So what could be the next breakout level?
This one has had so much power, but then it's rested and given you some pivots to get back in. And not everyone trusts Netflix because of the move from 300 all the way down to 60. But since earnings, there's been a lot to trust, and only a few different Q trades along the way. And if you look at the gap up, we talk about how gap ups provide power. And look at the size of this gap up, with Carl Icahn getting his stake in here, with major shorts being trapped. And then you had another additional trade when it went above the earnings high of 149.17. You had a quick move up. You had some two-way action, created a nice flag. Then you had another stair step, which wound up holding again. And now here we are, at historic highs. 190 is now your pivot. If it were to trade through it and you want to look for more momentum and you think it's going to do one last nice squeeze, okay, go with it. But just be careful that as you stair step higher, it's always prone to some kind of push through, squeeze the shorts, have guys chase, and then fail. Hasn't happened yet. So right now I would just trade with some smaller size, but trade those pivots.
And just like Netflix, LinkedIn had big momentum moves after earnings. What would your strategy be here?
Similar, and this one actually has had so much, even more power than Netflix. And this was the stock that I focused on last year. I said the three amigos, three IPOs that could potentially be major macro investments that fit the criteria and the ingredients. And that was LinkedIn, Dunkin' Donuts, and Coors. All different sectors, different types of trades, but all the same type of ingredients to have as an investment. And sometimes these are horrible trading stocks because they're sloppy, or they just shoot up and don't give you a spot to re-enter. And if you look here on LinkedIn, here is your gap up after earnings, okay, with power. Then it crossed above that earnings high, gave you some follow through, tried to flag once again, and now it's continuing. So for this, I think all you could do is use Friday's high as a pivot, 163. It trades through it. It can go to 170. Who knows? You have no idea. But if it trades through, comes back below, then you look for your cute short. But anyone trying to find a cute short in this trend here has looked very ugly.
All right, time for some quick hits here. Let's talk gold. The GLD finished in the red on Friday with almost a 2% loss. Where's the next level of support here?
I would say Friday's low. This stock where the metals resolved their triangles or their pennants to the downside. If you take a quick look at gold right here, you will see. I know in this area I was leaning long for it to break out above 163, but it didn't. It failed, so I stopped myself out. Then those looking for a short could have gotten short below this 161, and then boom, look at this move to the downside all the way to 154.56. It is a little oversold, so here's your new point of reference right here. I do think there's a small chance that it tries to fill this gap, but just like this last gap, if it doesn't fill this gap soon, you're going to see more downside, and you have to almost start looking more at the macro chart of gold to see where the major support doesn't come in until about 150. Right now it's kind of in no man's land.
And Facebook has been climbing, especially towards the end of last week. What's the next resistance level it needs to break above to really gain some momentum?
I think right now Facebook has been on the defensive. It's been downgraded. Everyone's talking valuation, and you had Barron's, you had all these different sites. But I still think that the highs of the year are not in for Facebook. Okay, if you look at it right here, it's in a tricky spot where you had your bounce off of, this was 2710, came back up. I would think right now it's like off a few pennies based on some of the tax talk or whatnot. Here's your inside range. If it can hold above this 28 or somewhere around there for a few more days, I do think traders will look for a momentum type trade. If it could take out 28.75, if it starts to give way and heads lower, I think guys are just going to take it off the radar until it's more conducive for better trading, like we saw back in this trend, which was really nice as it filled that gap over here and wound up peaking before going again.
And lots of bad news out of Walmart. The stock has fallen below all key moving averages. What's the next level of support?
This is, I think, just psychologically, it's something to watch. What was interesting is that, the news came out on Friday. It started to get beat up. The market fell real quickly, but it came back and bounced at the end of the day. Walmart bounced a little bit, but the markets went positive and just showed again the lack of power that the bears have had. So until they have some power to actually close the markets on the lows or close the stock on the dead lows, stick with trying to own these equities, but instead of just trying to short them. And if you look at Walmart here, it had a doji close into what has been bigger support. So I think this stock is somewhat, it's going to be very whippy. I would just avoid it for right now. That there was an easy trend last year. Peaked out with this false breakout, and since then it's been somewhat choppy. So I would just avoid for now.
And you mentioned Schlumberger before, which had a nice breakout on Thursday and managed to hold the top half of its big gain on Friday. So what level does it need to hold to keep momentum intact?
I would say Friday's low. If it holds Friday's low, it'll stay intact and potentially go higher. It didn't have such a drastic move like you saw in some of the other oil stocks, which we talked about on Morning Call Express. Last thing you want to do is take home a stock that closes on the dead highs and then have it gap down and not try and go positive and give you a way out. That's like, again, playing blackjack on you have an 11 versus 6, and it's the right thing to do, to double down and hopefully you get a 10. But if you get a 5 and the dealer turns over a 4, gets a 10, and you and you lose, it is what it is. And if you look at Schlumberger, it did go out on the highs, okay, after having a nice symmetrical pattern here. So if you took it home and then you walked in on Friday and it was down and it didn't rally back, there's nothing you can really do about it. I would say if you stayed with it and used this breakout price as your stop, I would stay with it, and as long as it doesn't break the low here of 79.50, I do think that it could stay in the game. But if it breaks 79.50, then you have to really watch a 78.07, because if that gave way, that would mean the market's probably in corrective mode.
So with everything on the calendar for this shortened holiday week, what is your focus heading into trading today?
I think it's just going to be multiple focuses. Every time we go through all these charts, all I keep seeing is how the 8-day moving average is the roadmap. Opinions aren't the roadmap. I would say a thesis is only good if the market confirms it. I know for me, I'm down to probably the least exposure that I've had since the rally reignited, right around Thanksgiving. So, and I'm fine if we continue higher. I'll tactically trade it versus taking the risk on. If we hold here and things set up again, I'll probably put the positions all back on. But the last thing I'm going to do is fight the tape, because anyone after a move lower comes in and presses short, they're all getting even much more frustrated than riding longs and shorting more into extensions and then just managing positions. So until you get rewarded for adding to a short, I would stay away from it, even if your thesis or your opinion is saying, how could the market be here? It can, and it can continue. So don't hurt yourself, and just ride the trend. The trend is your friend. that statement came from somewhere. It didn't come from me. It came from the last 100 years. So someone had to be right using that.
All right, and with that said, happy trading, everyone, and have a great day.
I'm Evan Lazarus, Chief Knowledge Officer for T3Live.com. You don't become a great trader by watching videos and taking courses. You become a great trader through live screen time. Accelerate that learning curve by tapping into the experience of seasoned professionals. Currently, we're offering 5-day free trials to each of our 4 mentoring rooms. In the mentoring rooms, we teach our strategies in the context of the live market. To sign up for a free trial, go to the T3 Live education page, fill out the form, and get started when the next trading session begins. We hope to see you in one of our mentoring rooms.